Now, I was looking at your most recent filings. I know it's kind of backwards looking to the most recent quarter here, but I saw you had a little bit of a shift in what looks like the tech space, kind of exiting some positions, including Alphabet, increasing other positions, entering positions like Supermicro, and of course, you've got that huge stake in NVIDIA. What do you like there?
Look, I think the NVIDIA story remains probably one of the best stories in the tech space because the underpinnings are strong. They can be demand. And irrespective of what the hyperscalers do, their CapEx numbers are strong. So one thing which is not fully appreciated, in my opinion, is that the CapEx to revenue for even a company like Microsoft is continues to creep higher. So all these businesses are becoming more CapEx heavy or capital intensive, which bodes very well for semiconductor in general. So the shift that you're talking about, in our case, has been cutting back software over the last 6 months towards more semi-type, hardware-type businesses.
And do you think that that is going to be a longer-term growth story? So you're not worried at all about the potential cyclical nature of this?
Well, everything is cyclical at the end of the day. So the question is to what level of cyclicality. Yeah. But in a world which is sort of struggling to find growth, look at Europe, look at Asia. I think this is still delivers reasonably good growth.
What are the derivative plays of that? I'm thinking power and energy that you need for all of this.
So we like utilities too, U.S. utilities, because they were, they're like 4 or 5 year lows and underpinnings are fine. But I think one of the lessons in the 90s was people always look for alternative to what's the next Microsoft or Intel. Well, the better thing was just buy Microsoft and Intel, rather than looking for a derivative of Microsoft and Intel, because there weren't too many.
I don't mean the derivative of NVIDIA. I mean the stuff to support it. Like, do you like utilities
hardware.
Because, okay, hardware.
Hardware, because I think if there's a PC upgrade cycle, the hyperscalers we keep spending, there's a sovereign aspect of AI, data centers, et cetera, that's coming in. You go to Middle East, you go to India, you go to China. So I think that remains out there. And the risk of disruption, or I would say somewhat of an existential risk in software, is going up, which is what the markets are getting nervous about. So which were fairly well known still.
And when you say that existential risk, what's the root
of
that?
Well, the growth rate could slow down dramatically some of the seat-based software companies.
Is that a macro story, or is that specific to industry conditions?
It's more industry condition, not macro.
Okay, so let's talk about the macro a little bit, because there's been a lot of concern about how the economy holds up here in the U.S. and really around the world as well here. I know you're more of a stock picker, you're more of a bottom-up guy, but how does the macro factor in to those decisions right now? Does it give you worry?
I thought you were saying, how does Macron fit in? But yes.
Or Macron, either way.
I'm too.
Yeah. So look, I think it's enormously impactful on the bottom-up basis too. So the elections, in some cases, people, I feel rightly so, folks are nervous in Europe, nervous in Mexico, right? I mean, they talk about changing, constitutional changes, which could be pretty significant, and that is one of the most liquid, most widely owned currency and fixed income markets in emerging markets. So we do try to incorporate sort of top down. And I think we just have to be careful about some of the things happening in Europe, because while the estimates are still being revised up, the top down aspects should make anybody nervous in Europe.
Well, I am curious about that. I think that really shocked a lot of people. And of course, we're still waiting to hear from President Emmanuel Macron, not the macro, at some point on Wednesday. If we do, for some reason, see some change in complexion of the European Parliament, and for that matter, the French government as well, does it really change the growth trajectory for Europe?
Okay, so there are two aspects to that. One is the election that just happened. They're not really that meaningful, except they give you a sense of direction of travel for the RN party or Le Pen. However, the growth you talked about, there has been no growth. That is a problem. If you look at between 17 to 20 years in Europe, there has been no growth, and I think that's an aspect which is kind of lost in the discussion, that there has not been growth, and the Ukraine-Russia war has made it worse, because the cost of energy is becoming a huge drag, which is why you're seeing the right-wing parties, come back to fore almost every country, because the cost inflation is a real issue.
Which also makes the U.S. situation a bit different. Yes, inflation's an issue for us, but we have the growth in a way that Europe doesn't. But do we learn anything about the elections in Europe and the elections in Mexico and in India in relation to the U.S. elections?
I don't think it really matters in the grand scheme of things in the U.S.
Really?
Yeah, because I think if you get Trump election, I think it'll be probably be net positive, not net negative, because from a regulation perspective. But I think it tends to move the needle a lot less than in Europe.
But what about changes in regulation, but more importantly, trade barriers?
Well, I think either you have the similar situation or status quo, or it'll improve. In other words, reduce regulations, so on and so forth. U.S.-China relationship, that's a train going in one direction. I don't believe that's changing. Is the speed at which it moves. That's not going to change. The rhetoric sometimes increases or reduces, but the direction is going the same way. The question really is that the growth drivers in U.S. equity markets, they're not going to be impacted by any of this, right? If you look at the tech side or even the large banks, they're doing fine. So I think that would not be impacted as much by the politics of it.
What about the other side of that, China specifically? Is that still, do you still find opportunity there? Is that investable at this stage? As a foreign investor, that is.
It is investable, but less so than before. We're concerned about the private sector side, and we have been for some time. We like these state-owned enterprises. But I think China is not going to be the same as it was just a few years ago.
We have to ask you about the Indian elections. That also shocked a lot of folks. I guess, were you surprised that the BJP lost as many seats as they did? And now that Modi at least has maintained his control over the country to a certain extent, but with maybe the potential for having to compromise on things that he didn't have to compromise over the previous 10 years, how much does that change India's trajectory?
Was it a surprise? Yes, it was a surprise. But when we look at the historical context, the number of seats that they got, 240, it is actually a pretty darn good number in a grand scheme of things. The reason being that you're looking at the incumbent running for the third time. I mean, how many times, if you look at UK, for example, last 100 years, how many times have the same individual or party come back into power with thumping majority the third time, irrespective of the economy? I believe it's two times in the last 50 plus years in UK. That's a rare phenomenon. So in that context, it's fine. The other important thing is the partners are supporting him, particularly one of the parties that's supporting him, Chandrababu Naidu. He's very, very pro-growth. So we feel the economic growth agenda does not change one bit. Some of the major big picture reforms might get pushed back, but they don't impact the market as much.